Hey, what's up you money makers? Welcome back to my channel. In this video I'll be talking about ticker symbol CTRM CASTOR Maritime Inc. The stock is trading at 80 cents. This is one of our favorite stock that we talk on this channel. I haven't covered this stock for a while, so I would like to share the latest updates about CTRM, what's going on with that, what's the price range looks like, how the stock is doing, and what we should expect. We'll also review the pros and cons of CTRM, investing in CTRM. If you're holding the stock at the moment, I'll also discuss that. If you're trying to build new position in CTRM, we'll also discuss that as well, so watch the full video. The third thing is we'll do the price prediction and we'll review what can happen to CTRM price at the moment, whether the stock can remain in Nasdaq listed. As you know that there is a regaining compliance period from Nasdaq. They have deficiency notice from Nasdaq as well, so we'll review that. I'm not a financial advisor, so do your own due diligence and research. This is a penny stock, so do not invest your entire portfolio. Only invest the money that you're willing to lose. Penny stocks are risky. You can make a ton of money. On the flip side, you can lose them as well. Consider clicking on the like this video. Consider subscribing to my channel. So like, share, and subscribe. Your support is very much helpful and I appreciate it, because I spend countless hours on research and posting these videos and share this information with you so you can make informed financial decisions. So click on the like button. It doesn't cost you a penny. Now let's take a look at the stock. Now one day the stock is down 1%. The 5-day the stock is down 10 to 11%. For 1 month the stock is down 22%. For 6 months the stock is up 400% more or less, and many of us bought this stock below the 30 cents level, and we are still making 3 to 4 times in return on our investment at the moment. Now looking at this CASTOR Maritime, I wanted to share this article, which is a pretty balanced article that says pros and cons about what's going on with CTRM. So let's read this and let's go through this, and I'll be able to explain step by step as to what you should consider out of this article. Now the author is Alex, saying CASTOR Maritime is attractive yet but lacks the operational strength. What it means is the company is shipping company. That operator is aggressively growing its fleet, and it's logical that this is a speculative economical argument underpinning an investment in the shipping stocks, because the way this industry works is they buy more vessels, they make more revenue, they generate more profit, and to do that, in order to do that, it's a cash burning business, so they'll have to raise more capital, and they use this capital to buy more vessels, and that's precisely what CASTOR Maritime has been doing. In addition to that, now the fleet is excess of dozens of ships. They started last year in 2020 with around 5 or less than 5 ships and aggressively grow up to 14 ships by this time in Q1 2021. CTRM stock is currently trading under $1 price per share, which is super important because they have deficiency notice from Nasdaq. It still shows up into the non-compliant companies on Nasdaq's listing center right here. They got this notice on 14th of April 2020, and since then they have been trying to regain the compliance. Now what this means is this stock needs to gain or stay above $1 minimum bid price requirement from Nasdaq for more than 10 consecutive business days. If a stock is trading below below $1 price point for 30 days, it closes below $1 price point for consecutive 30 business days, then they will get the deficiency notice from Nasdaq, and they will have 180 calendar days to regain the compliance. Now once they pass the 180 day, the Nasdaq still reconsiders whether they can get an extension or not. So right now CASTOR Maritime received 180-day extension from Nasdaq to meet the Nasdaq's minimum bid price rule requirement, and this notice was given to them as you can see right here, December 30th 2020, and they have time until June 20th 2021. So it's not just end of the world. And also in addition to that, even though, so right here I want to show you right here that they tried gaining the compliance from Nasdaq. The stock was traded starting from February 9th to February 25th. The stock was closed above $1 price point level, but we haven't heard any official announcement or confirmation from Nasdaq that the stock regained the compliance, because there are some discretionary factors that the Nasdaq considers. The overall goal for Nasdaq is for the stock to stay above $1 level even after regaining the compliance. And as you can see, the stock is trading below $1 level right after that, and it had a hard time. The minimum support that they have is around 73 cents, the resistance or the support, and the ceiling resistance is around 95 cents. So if the stock touches 95 cents, after that the stock has a pretty challenge to cross $1 level. I just wanted to share this information with you. Now, what happens if they don't go above $1 price point? Whether it's going to get delisted? Probably not, because of there is one more workaround that they can implement, and that's called reverse stock split. Now, what is reverse stock split? Is they merge more than one stock into one stock. So it's a reverse split ratio, the other way around. Usually, many times company has they have a stock split from 2 to 1. That way the stock price can go higher. If the stock is trading way too higher and if they want to lower the price, they do the other way around. So the reverse stock split, Nasdaq accepts as the method of regaining compliance with the minimum bid price rule requirement. So the answer is yes. Nasdaq reviews, or not Nasdaq views, reverse stock split as an acceptable method to regain compliance. If the company determines to implement a reverse stock split, they can do it within 15 calendar days. So this is not really out of the question, which makes me think that there's not a huge risk of CTRM getting delisted from Nasdaq. They really want to remain on Nasdaq to regain the compliance, so that they have more exposure, they have more investors, they have more buyers who wants to buy CTRM stock. If they go to the OTC platform, naturally they will be having lower volume and lower traction. Now, one more thing that the author want to say, I would like to caution investors who are seriously considering establishing a position in CTRM stock to simply dismiss the Reddit, Wall Street Bets, or Robinhood narratives. And I wholeheartedly agree with what the author is saying, because you do not really want to read some articles, read some comments from Reddit, Wall Street Bets, or watch a random YouTube video and buy. If you're a new buyer, you want to think in a way that whether you believe in the company in the long term, whether you will be holding this stock. If you bought this stock around 25-30 cents level, maybe you're making 3, 4, 5 times more money on your investment. You want to hold on to that. Pretty much, I would say I agree with that. Now, but if you're trying to buy a new position, you want to ask yourself whether do you have any other opportunities where you can double, triple, or quadruple your money, because this is a penny stock. There could be multiple other options in the market where you can double your money faster than CTRM. I'm just sharing my thoughts and opinion. It's up to you whether you want to buy or not. I'm not a financial advisor, but you definitely want to consider this, and this is what the author is saying. Whether CASTOR Maritime makes sense depends entirely upon the fundamentals of the company, the way the company operates, so on and so forth. Now think about it. There was a challenging time for 2010 and 2020, the whole decade. It was an extraordinarily challenging decade for the shipping industry. I'm not saying that it's going to be like that in 2020 and beyond, so 2021 and beyond, but there is a huge difference between two extremes. On the top of that, we are running through this pandemic where they're impacting business, especially with the shipping company. However, CASTOR Maritime may then be able to make significant headway into the sector, which is the minimum strength. They have now 12 of the CASTOR Maritime's 14 ships operate in the dry bulk vessel market. The company's second, all these tankers are doable, and they are able to generate more revenue, generate more profit, and the company has been expanding themselves into the non-bulk shipping industry. And before, they were only doing some dry bulk transports. Now the company has recently expanded into the tanker ships, so the company now operates to dry bulk shipping as well as the liquid tank services as well. So the company is raising more capital. That way they're raising more revenue, they're raising their profitability as well. And this is the whole business for CASTOR Maritime that I wanted to share. They did manage to substantially increase their revenue from 2019 to 2020. Even though the pandemic was there in 2020, they kept growing through the first 3 quarters of each year. The revenue rose from 3.12 million to 8 million. In 2019, they managed to squeeze $560,000 profit from that 3.12 million revenue that they made. In 2020, it was pretty different. They recorded a loss of close to $1 million on the $8 million revenue, but they kept buying more and more vessels. So we are assuming that they'll have even more revenue in 2021, 2022 and beyond, and more profitability. Vessel operating expenses are higher usually on an absolute basis, but it's not much higher than the percentage of the revenue. Now fleet utilization decreased from 99 to 89 89% during the period as well. And it's difficult period because of the pandemic, we understand, but you should also want to consider if you're trying to build a new position in CTRM. And now the key takeaway is I wouldn't jump into CTRM stock right now, as the author says. And I'm just reading what the author says here. So if you do not have the position, once again, consider if you have any other opportunities that you can buy. There are signals that the company is in the right sector coming out of the pandemic. So there are good days ahead for CTRM, but the important thing is that the company will need to cross this $1 level and go above and beyond the $1 level to stay within the Nasdaq, which is the most important thing that you want to consider. For one day, their RSI is 37, which is a pretty good RSI. For one day, their MACD looks pretty good as well. For 5 days, their RSI is 40. As you can see, we have seen some peaks and some valleys. As you can see right here, the stock went to 91 cent. It closed, it got back to 70 cents, but there is a strong support at 73 cents. So the stock after 73 cents spiked up all the way to 81 cents, and it did not go below that price point. Now, if you take a look at for 1 month, the stock had a pretty hard time crossing that $1 level. As you can see right here, $1.03. The another resistance that the stock has is around 98 cents. As you can see on my screen right here, 98 cents right here and 98 cents right here. And I wanted to show you the 1 minute chart as well, but I think this is okay. 1 day chart, you want to take a look. Let's take a look at the 1 minute chart, and you should be, but it wouldn't show what I wanted to show you. So 1 day chart is pretty good. 98 cents or 95 cents, I wanted to say. As soon as the stock goes to 95 cents, I see the impact on the volume. The volume decreases. That doesn't really help the stock to bump up to $1 level. So the true resistance is at around 95 cents. Yes, the stock touches 98 cents, but then it goes back pretty drastically, as you can see. So this is the level that you want to consider, 95 cents, which is where the stock has a real good resistance. So I wanted to share, guys, with you this information, hoping it will help you making informed financial decision. Consider liking this video. Your like is very much appreciated. Like, share, and subscribe to my channel for future videos as well. We have been doing pretty good in 2021. Our investments have doubled, triple, quadruples in penny stocks, and as well as we started doing some crypto based stuff as well, which is looking pretty lucrative. And there is a light at the end of the tunnel in terms of the business starts opening because of the vaccine, the coronavirus thing that is going on right now. It's going to be relaxing very soon based on the reports that we have been getting. So there is definitely some good days are ahead. So I wanted to share this information with you. Thanks for watching. Like, share, and subscribe. I'll see you in the next video.